Remember 2021? That was the year your cousin who couldn't balance a checkbook suddenly became a crypto day trader after watching a few TikToks. It was a wild, unpredictable party where everyone seemed to be making money, and the punch was spiked with something called Dogecoin. Well, if 2021 was the wild frat party, 2025 is the morning after. Except the party never stopped. It just moved into the boardroom, the central bank, and your local coffee shop. The music is different. The players are wearing suits, and the stakes have been raised so high they're giving satellites a nosebleed. What's happening right now isn't just about making a quick buck. It's a fundamental rewiring of how money moves, how power is held, and how we think about value itself. You should care about this, even if the word blockchain makes you want to take a nap. This isn't just tech bro chatter anymore. The decisions being made in these digital arenas are starting to ripple out and touch the real world in tangible ways. We're talking about the future of your savings, the way you'll buy groceries, and even the economic balance of power between entire nations. The story has gotten so much bigger than just a bunch of numbers on a screen going up or down. It's a global drama with a cast of characters that includes Wall Street titans, rogue developers, national governments, and maybe, just maybe you, trying to figure out if you should be excited or terrified. So, let's break it down. Think of me as your guide through this digital jungle, cutting through the jargon with a machete of common sense. We're not going to get bogged down in the technical weeds. Instead, we're going to look at the big, juicy headlines and figure out what they actually mean for a normal person. Let's start with the big one, Bitcoin. For years, it was the digital equivalent of that weird, expensive collectible you keep in a box, hoping it'll be worth a fortune someday. You wouldn't actually use it, but that's changing, and fast. Now let's talk about the less glamorous but arguably more important side of crypto. Stablecoins. If Bitcoin is the flashy, unpredictable rock star, stablecoins are the reliable roadies working tirelessly behind the scenes. These are digital tokens designed to hold a steady value, usually pegged to $1. And right now, there's a war brewing to see who can build the best one. For instance, a major DeFi application on the Solana network, Jupiter, announced plans for its own stablecoin, aiming to create a decentralized, stable unit of account. This isn't just a niche project. It's a sign that the demand for a trustworthy digital dollar is exploding across the crypto ecosystem. The big banks are not about to let a bunch of startups eat their lunch. They see the writing on the wall. Global financial giant Citi released a report that was anything but boring, predicting that the market for tokenized assets and stablecoins could swell to a staggering multi-trillion-dollar figure by 2030. They aren't just watching from the sidelines, they're actively exploring their own versions. The race is on to create a regulated, bank-grade stablecoin that can handle everything from international trade finance to micropayments. Everyone wants to be the digital dollar of choice, because controlling that rail is like owning the world's financial plumbing. Speaking of plumbing, let's turn to Ripple. This company has always played a different game, focusing on banks and payment systems rather than just public speculation. And in 2025, their moves are getting bolder. There are strong whispers that Ripple is deep in the process of applying for a Fed master account, which would essentially give it direct access to the US central banking system, a privilege normally reserved for traditional banks. Imagine a crypto company being able to clear payments with the Federal Reserve. It's like a tech startup getting its own key to Fort Knox. This is a power play of epic proportions. Section 4. Old gold, new tricks, and a shifting world order. While all this digital drama unfolds, something ancient has been quietly making a comeback. Gold. The shiny yellow metal recently blew past a historic milestone, crossing the $4,000 per ounce mark. This isn't just a random number, it's a huge flashing sign that tells a story about trust. When people get nervous about the stability of traditional paper money and the economies backing them, they often run to the perceived safety of gold. For centuries, it has been the ultimate store of value, and right now, central banks and everyday investors alike are buying it up. It feels like a rush, though gold never goes out of style. But this isn't just your grandfather's gold rush. The old safe haven is learning new digital tricks. Tokenized gold. where physical gold is held in a vault and represented by a digital token on a blockchain, has surged past $3 billion in total value. For example, a company like Paxos holds 1 ounce of gold for every PaxG token it issues, allowing anyone to buy, sell, or hold a piece of real gold with the ease of sending an email. This renewed interest in hard assets is happening alongside major geopolitical shifts. The BRICS nations, Brazil, Russia, India, China, South Africa, and other emerging economic blocs are actively exploring their own digital payment systems and trade settlement mechanisms that bypass the traditional US dollar-dominated network. They are tired of playing by someone else's rules and are looking to build their own financial architecture. The rise of these alternative systems could fundamentally alter the economic world map over the next decade. At the same time, a torrent of investment is flowing into another futuristic domain: artificial intelligence. Big investment funds are making massive bets on AI-focused assets and infrastructure, recognizing that this technology will be just as transformative as the internet was. The convergence of AI, blockchain, and new geopolitical alignments creates a complex and volatile cocktail. Money is moving with incredible speed into these next-generation technologies, seeking out the platforms and protocols that will power the future. It's a high-stakes game where the winners could define the next era of both technology and global power. Section 5. Mind the Gap. Navigating chaos with a calm hand. With all this talk of global power shifts, technological revolutions, it's easy to feel overwhelmed. The markets themselves reflect this chaos. Just recently, following some unexpected news about international tariffs, the crypto market experienced a brutal day of liquidations, totaling a jaw-dropping $19 billion. That's not just a number on a screen. It represents countless individuals who had their positions wiped out in a matter of hours. The speed and ferocity of these price swings can be devastating, and it's a stark reminder that for every success story, there are many people who lose significant amounts of money. This isn't a game without consequences. The human cost of this volatility is real and deeply concerning. We heard the tragic news of an investor who took their own life after suffering massive losses in a market crash. This is a heartbreaking and sharp reminder that behind the charts and percentages are real people with real lives and real stress. Your mental and emotional health is infinitely more valuable than any portfolio. The pressure to win in these markets can be immense, but it is crucial to protect your peace of mind above all else. If you are feeling overwhelmed, anxious, or distressed by financial stress, please reach out for help. Call the mental health hotline at 866-335-9926. Text the same number, or visit www.mentalhealthhotline.org to connect with resources. There is no shame in it. So, what is the sane, sensible takeaway from all this madness? First and foremost, do not panic. Nobody has a crystal ball, not the experts on TV, nor the anonymous gurus on social media. The one thing that is clear is that crypto and digital assets are no longer a niche hobby. They are becoming a permanent and integrated part of the global financial system. If you feel compelled to participate, the wisest approach is to start small. You don't need to bet the rent or your retirement savings. Think of it as an educational journey, not a lottery ticket. The most recommended strategy for beginners is called dollar cost averaging, DCA. It's simple. You invest a small, fixed amount of money on a regular schedule, like $25 every week, regardless of the price. This approach smooths out the volatility and prevents you from making impulsive decisions based on fear or greed. Learn as you go. Read from credible sources, and never invest more than you are truly comfortable losing. The world of money is digitizing, and being informed is your best asset. Take care of your finances, but more importantly, take care of your mind. If you believe in this digital future, a slow and steady approach will serve you far better than a frantic sprint.